right? That 777 is what you consistently see in that Telegram chat. It's the profit, it's the wealth, right? And in the way Dr. Brightwood brought it home, you want to make sure you add that I am 777. So I am 777. So once again, ladies and gentlemen, this is Tasha M. Dyer, the Trade Whisperer, creator of the BYOB Cash Out Strategy. So as you're logging on, continue to drop it in the chat, but make sure, yes, this is a BYOB Market Talks call. This is a training call, but you still want to make sure that you are walking out your affirmation. You walk it out on purpose, right? You walk it out on purpose. We're intentional about this thing. We're intentional about what we came to do. So you definitely want to make sure you do that. So now, as also, what do I see? Okay, I saw some, the BYOB Wealthy Women, the BYOB Wealthy Woman. And of course, you definitely, right? I'm an heir of God's kingdom. You definitely want to add to it, right? Because we're walking it out on purpose. We are walking this out with intention. So you are wealthy, right? This is what you are. So now, if this is your first time on the call, this is your first time here with us this evening, let me get a 111 in the chat. Your first time on BYOB Market Talks, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. You are still learning how to cash out, let me get a 222. So welcome, welcome, and welcome back. Welcome and welcome back. Now, what we talked about, and I'm gonna go ahead and get my screen share together. Go ahead and get the screen share going. And what we talked about last week, right? Last week. So this is really like that part 2. Okay, so I want to, welcome back. If you are not here to tell it, our YouTube channel definitely has the first part for you. YouTube channel is going to have the first part, but we were talking about trend lines, right? We were talking about trend lines. And then of course, I told you we come back because what we've been doing, okay, and understanding what we've been doing is we've been training to 3 of the tools, right? We're mastering 3 of the tools, right? We're walking through that. And as we do that, we talked about what an actual trend line was, because and just to understand, I use trend candles. So I don't always draw trend lines, right? So you really, in the past, you haven't seen me draw a lot of them. But that transition happened because a lot of you are visual learners, right? You're visual, you want to see it, and that's okay, that's fine, because it's just, you just want to make sure you know how you're doing it and what you're doing. And so what I want to do tonight is I definitely want to show you how we can apply it to some of the tools and the things that we're using. So as we go through here, I'm gonna first show you the BYOB cash out, but I do want some feedback. So if that actually helped you and you have actually been drawing those trend lines and doing it, looking from Thursday, let me get a 777 in the chat, right? Let me get a 777 in the chat, because that's what that was designed to do, for you to actually take it and begin to implement it and to actually begin to look at it. Somebody say got a 777 with a they work. Awesome, 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 awesome. And so, and that's to give you that visual, that's to help you understand, right? That's really what that is. There they go, keep the 77s coming. I love it, I love it, I love it. So I love it, I love it, I love it. Now, what is the BYOB cash out, right? What is it? And 77 profits today too. I love it. So what is the BYOB cash out? And just to kind of help you understand what the BYOB cash out is. So the BYOB cash out is made up of 3 indicators, right? It's made up of 3 indicators, okay? Now, what those indicators are my stochastic, I got my Hikinashi candles, and my PSAR, right? I got my stochastic, I got my Hikinashi candles, and I have my PSAR. Now, this is what I want to make sure you understand, right? That's a Japanese, switch on over for me. That's a Japanese candle, right? That's a Japanese candle. Now, That's what they look like. Those are different, okay? That's what's on your MetaTrader 4. So I want to make sure that you are not trying to use these candles to do the BYOB cash out, right? You need to be on the vibrato. You need to be on the vibrato. Now, okay, because that's what they look like on your phone. No, you cannot do that. That's not going to give you an accurate reading. We're talking about a 92% back-tested accuracy rate. And I know you guys, if any of you are following myself or Mr. Rogers on Facebook or anything like that, or any social media platform, then I know you see the testimonial videos that we continue to drop. And those testimony videos are people cashing out. They're really cashing out, and they're doing it higher than a 92% accuracy rate. So trust and believe that you want to follow the strategy. You want to make sure you're putting it on, you have it here, right? It's on the web analyzer where we have it, and then that, because that's all they're doing is what we teach. And so you have it there, and then you turn around and you enter the trade in your MetaTrader 4. That's what that's for. You enter the trade in your MetaTrader 4, just so you understand how you do it. Because you're not taking trades from the vibrato, you're analyzing trades here. And then you actually enter the trade on your MetaTrader 4. Now, my stochastic is a leading indicator. That means that's going to happen first, okay? My stochastic is a leading indicator. Then you have my Hikinashi candles, right? Hey, I gotta stop for that. I gotta stop for that because I love testimonies, right? I love testimonies. So, no, I got it. I love testimonies. And this testimony says somebody is actually at 100% accuracy rate. So that's what this does. So you want to follow it and be on the vibrato and enter it. So I'm stressing that. So I love it. 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 Now, that's what this does for you. So now back to the training. But I'm gonna get diverted when we see testimonies. I am gonna get a little sidetracked when I see testimonies because we get excited. That's what we're here for. 1 million families financially educated and impacted. That's what we're here for. And so I'm always divert for a testimony. So we got our stochastic, right? Our stochastic is a leading indicator, okay? That stochastic is a leading indicator. Now, with that stochastic being a leading indicator, that means because these are Hikinashi candles, right? They're Hikinashi candles. They are a lagging indicator. So they are translating my Japanese candles. Those candles that are underneath there, they're actually translating this for you. They're interpreting what they mean for you. So you don't have to figure out, and you don't have to kind of go through, oh, wait, do I got any golfing candle? Do I have tweezer tops? What is it? Do I got a morning star? Like, what is it that I'm looking for? You don't have to do that. The Hikinashi candles do all that interpretation for you, okay? They do it all for you. And so that's why it's as simple as a flat top and a flat bottom, a flat top and a flat bottom, right? That's why it's that simple. But you need to understand that it's a lagging indicator. So I'm looking at my stochastic first, then I'm looking at my Hikinashi candles and my PSAR. Now the PSAR is also a lagging indicator. So because both of these are lagging, it does not matter which one comes first, okay? It does not matter which one comes first, but you don't take the trade until you have both of them. Now, I got my stochastic. And you notice that it's normally going to happen prior to, like, look at where my stochastic is, blue line cross over the red. You notice where my crosshairs are when they go up? They're not even on that red candle with a flat top or the PSAR flip. This one just happened to be soon, right? It just happened to be soon. Now, as I'm looking at that, I got my blue line cross over the red and a downward momentum around that 80. Got that. And then I have a red candle with a flat top. I look for that red candle with a flat top and that PSAR flip to the top, right? That's what that is. So, this is the setup. This is the cash out. That is what this is. And when you know that you have the BYOB cash out, you have the BYOB cash out strategy, you right here, this is what was back tested. So, however, we use something called time frame confluence. Time frame confluence for several reasons. But one of the reasons why is that 8% can increase if based on your, your pip reaction time, based on broker fees, based on how long it takes you to get in the trade, so many different factors. So to keep your accuracy at a higher rate and to keep your accuracy there, because each one of us are different and we are all going to have a different pip reaction time. What a pip reaction time is how long does it take you to get in the trade? From the time you see it, to pick up your phone, to grab that currency, to hit execution, how long does it take to get in that trade? We're starting on a 15-minute chart, 15 minutes. So we know we're scalping at this level. So we know that it's a market execution because we just train on the different market orders too. So we know that this is a market execution. So knowing that this is a market execution, knowing that I have the BYOB set up right here, then I put the arrow here. Don't put the arrow on your chart. Don't do it. Don't do it. Don't do it. This is because we're not looking right here. We're actually looking right here. That's why we do that. Now, I want to do what's called, like I said, what's called time frame confluence. So with that time frame confluence, I want to do two things. I want to drop down to a lower time frame, right? Which is my 5 minute. The purpose of dropping down is tighter entry. So I want to make sure I have that tighter entry. And with that entry, I'm selling. I'm selling right here. This is what I'm doing. I'm selling. Now, when I go up to the hour, I jump up to the hour. And when I jump up to the hour, what I'm looking for is I need it to look like a setup, look like it's something I'm about to take. And it has a green candle here, right? This is green. Now, this is your exception to GBP can offer you an exception to the rule. The exception to the rule is, right? I can use my 30 minute. Why is that? Because of the amount of liquidity that GBP pushes into the market, okay? That GBP pushes into the market allows me to drop down to the 30 minute. Now, I'm not dropping down to the 30 minute if this look like I'm about to go into a serious buy, right? I'm not doing that. But I can look at this and tell that it's been selling, right? It's been selling, and it look like it's coming out of a continuation. So I can go right here and I can look on my 30 minute. Okay, I can look on my 30 minute. And when I look on my 30 minute, then you can kind of see where I can definitely grab my 10 pips and cash out, or cash out and at that support resistance line. That is what you're doing. Now, if you are not a 111, or understanding my 1 hour is the swing in the market, my 4 hour is the trend in the market. So honestly, for my ones that's been trading and understanding the skill set a little bit more, is when I go up to the 4 hour, you understand that I actually am still selling, right? Look at that trend, right? That confirms that was just a pullback on the hour. That confirms that was just a pullback. So how do y'all break this down? Where do you focus? Because you build on this. So if you're a 111, you drop a 111 in the chat, or even a 222 and you're still learning, grab your 10 pips out. If or to understand support and resistance lines and you're still trading, you know that when I check my 4 hour, the trend in the market, I can actually go for more than one take profit. That's like my 333s, right? So I know that I can actually go for more than one take profit. But if you're a 111, don't try to do that. Learn the skill set first. 10 pips and cash out, then you advance from there, right? You get comfortable with it, you grow it, and you build from there. So that's the BYOB cash out. Now, as we dive into training tonight, it's important to understand the strategy as you go through, because understanding no matter what we do, no matter what we look at, no matter how we do it, you are still going to have to apply the BYOB cash out, okay? You still have to apply the BYOB cash out. You have to. Now, when I come over here, right, this is one of the tools. So understand that if I'm looking at the vibrata, we understand how the vibrata, we've been taking trades of vibrata, and we understand that the vibrata is definitely going to, like you see how it's been in that nice downtrend, that vibrata is going to consistently call different trades or different potential trades because of the pullbacks that happen. And you know what happens when it scans the market. So you would get a call here, you would get probably one here, you know, you get one here, you get one over here. You'll consistently get a call on a vibrata, but you have to be able to come back and actually look at where you are in the market, like understanding how it breaks that trend. We'll come back to this one, right? Because you see, like even in this uptrend right here, you know, the vibrata, let me go to the higher time frame. So like even as that was in that uptrend right there, the vibrata would definitely have triggered at each one, you know, at each one of those, and it would have pulled down. And so of course this would have been another trigger up in here, and that's what they're called entry triggers. But for the vibrata, you need to be able to understand where you are in the market, right? You got to be able to understand where you actually are in the market. Now, when I come over here to the harmonic scanner, the difference with this one is this one actually scans the market for those harmonic patterns, right? It scans the market for harmonic patterns. And when it scans the market for those harmonic patterns, then you notice is, right, after it does that, then we still needed to break that trend line. So if I come over here, right, and like we had NZD, USD, right? Put the lines on here. Let me just put these lines on here. Let me show you. Let me put these take profits on here. Now, these are the take profits from, right? These are take profits that actually, these are take profits that are actually was called with this trade, okay? So that's 1, 2, and then of course you're gonna have 3. So now you guys know I'm using these numbers because once again, it's about the training, right? It's about you all being trained. But you know that I'm not leaving a take profit way up there. I'm bringing it down. Let me show you why. Let me show you why. Let me switch to the line chart. Time today. All right. So, okay, there we go. I'm like, it's pausing on me for a minute, but that's okay. Now look at this right here. This is why I switched to a line chart. Look what this line does, right? Look what the line does. So the line actually gives me a closing price, right? It gives me that actual closing price. So if you notice that with this closing price, it doesn't reach up here. It doesn't even reach the top of here. So I'm going to bring mine down until where it actually touches on that closing price. That's what I do, right? I actually look at closing price when I'm looking at my take profits. I adjust all of them as need be. And then of course, right? So as we've been training, you've kind of seen that. And so now you see where it wicks up past that, but we also understand where closing price is at. So understanding these trend lines, and I know you guys are like, oh, they work, they work, they work. I love it. So now, because even when we pull it in the morning, so what we've been doing on our morning calls, on our 5 a.m. calls, is actually looking at the harmonic scanner, you know, pulling trades from there. We've been looking at vibrata as well. We've been looking at these trades, right? We've been looking at these trades, and we're looking at them, and we're putting that trend line on there. So you can see what this has actually been doing before it broke to come down. And then of course, you know, this went to that harmonic pattern and now it's coming back up. But look at how, and the reason I'm showing you this one, because it's a lot clearer. We definitely want trends to go impulse, correction, continue. You know, we want them to be perfect, right? We want them to be, oh, it's an impulse, it's a correction, it's a continuation, it's a correction, it's a continuation. We just really want them to be perfect, but they're all not gonna be like that. And this one actually had a drop when you look at it, and now you see it moving back up or it's coming back up. So when I'm looking at that, that's why I'm showing you this trend line. So even when you look at that though, you still will want this one to break, right? So you look, because we're taking trades on a higher time frame and not just the 15-minute. So even if I look at this one, and I'm gonna keep telling you guys, don't talk about my trend lines, because that's those two touches, right? So those are those two touches. I need those two touches. And as long as I have those 2 to 3 touches, then you have a trend line. And as I'm looking at that, you can see, right? You can see, so there is no password. Hold on. There you go. That's the Zoom ID. So there you go. So when you look at it, you can see that this, actually broke it, and you can see where it's actually pushing up, right, where you can kind of see where, look at how it broke it. But each one I have to apply the BYOB cash out, right? Each one I'm gonna apply the BYOB cash out. And as I do that, now look at it on the hour. Okay, you see how this one broke. Now, I don't know if anybody's in this live trade, because I mean, you see that that's a live trade. Let's check the 4 hour. Look at my 4 hour. You see how my 4 hour is still progressing up? So that's actually a live trade that I'm sure somebody's in right now, because you are the signal. And then I wanted to show you, look at the difference that the trend candles make, you know, compare. Like, look at the difference that they actually make when you look on there. On the, aha, look, somebody's like, I'm in it. There you go. I knew it. So now, as you're looking at this, okay, you got the blue line cross over the red and a downward momentum, right? Blue line cross over the red and a downward momentum. I got a red candle with a flat top and my piece are flipped. Look when this flips. Look around this time that it flips, okay? And it flips right around time, right? That's why I said, if you want to draw the trend lines, that will help you with the visual. But if you just look at, you know, how it plays out with your time frame confluence and everything, it's going to always be around where you actually have, you know, where you actually have all this happening. So where you actually have the strategy lining up. So right here is where everything lined and where it flipped. And so if I come to my 4 hour, what I'm looking for is confluence on this 4 hour. Now look when I got confluence on the 4 hour. I got confluence on the 4 hour right here. So right here where we got ready and where they broke that trend line. You see that trend line? And they broke that trend line. And so let me go ahead and put my confluence arrow here, right, on this one. Actually, you had some confluence right here. But yeah, you had some confluence on that one right there. So this is where we had our confluence. And if I drop down to where I'm looking at when it broke that trend line, it's definitely right there. If I'm looking, this one was a little choppy. So even though we had confluence here, we would not have gotten in a trade until here. Now what happened right there? That's where it broke the trend line. You see that? You see the pattern? You see how it's happening? You see how it's working out for you? When it breaks that trend line is when it starts to push through. Cannot forget our drop down. All we did so far is check our confluence on the higher time frame. We still have not done anything with our lower time frame, okay, which is for our entry, okay. You still have to do that. You really got to do it up here. You have to do it on anyone, but you really have to do it up here. So if I look at my sell, look how, look at my sell. It's still selling. It's at, now you notice that. Okay, let me show you this, and then I'm gonna come back to that statement. Now look right here. It's buying, okay? It's buying. So this one is still buying. That one is still selling, right? Now let me show you about tighter entry or earlier entries. So if you know that you were trading on a lower time frame, like let's say had we been trading on the 15, let me put, actually, I'm gonna just put a thumbs up right here or something, because I don't want to mix my arrows. So, but if I'm looking right here, and you can kind of see that right here is where this one literally would have begun for a 15-person trade, a 15 minute, then I come over here, where's my thumbs up? So I actually didn't have confluence right then. I would have had to wait. What time was that when that happened? And if you got a question, drop it in the chat now. Drop it in the chat. You know what? Let's not use the thumbs up. I can't get it right over the thing. I'll use a check. Right there where the little point is. So if I come up here and I check it, yeah, you see it's still not right there. So what time was it? It actually was, how much time did I have to wait? That was 15. So I had to wait about 45 minutes, but that's okay. So until we actually got confluence, I moved that over just a little bit. That's still not right there with that one. I moved that one over just a little bit, and you can kind of see, right? I don't like the check. You can kind of see right here where it was still, you know, where you would have been. But look, so we got a little consolidation. We didn't have a flat top. So you actually would have ended up in the trade right around here. But sometimes you'll have that confluence right here as well. So you would have been able to take a trade or get in a trade a little bit earlier. So that kind of shows you how to walk through that. So before I look at another one, or we pull another one up, you know, do I have any questions? Comments, even testimonies, drop it in the chat. That's what this is about tonight. It's showing you how to take what we learned on Thursday and bring it forward to using the tool. So you can definitely walk these trades out on purpose and increase your accuracy rate. No questions, comments, testimonies? No, drop it in the chat. Don't unmute your mic. Drop it in the chat. I got you in the chat. And so, yeah, go ahead and drop it in the chat if you haven't, and I will answer your question. And so it's the same thing. So this is, I know, so let me ask you this question before we start walking through this one. I know in an hour when you check for confluence, that's the most common thing you'll see is indicate. It depends on what time frame you're trading. So you jumping in. So it depends on what time frame you're trading, right? It's all going to depend on what time frame you're trading off of. That's what it's going to depend on. Because, right, that's what it's going to depend on. So if I'm on a 15-minute, then absolutely, then I'm going to check the hour. On the hour, then I'm going to check the 4-minute. So if the trade is taking off, and look, 777. So if the trade is, look at y'all. I love y'all. It's like, we're gonna take these trades. So no, I don't use the lower time frame for the stop loss. Okay, let's talk stop loss too. Look at y'all. So what happens is you can see you're waiting on it to break that trend line. You're waiting on it to break that trend line. And I mean, not the trend line, the support resistance line. You're waiting on it to break that support and resistance line. And when it breaks that support and resistance line on a lower time frame, after that correction, then that's when you enter the trade, right? That's when you enter the trade. Like we just got a new 15. This is a 15-minute candle. We just got a new one, and you see it's breaking it. And so you can kind of see where you are. And so you want to monitor, you want to pay attention, because look at what my hour is doing. My hour look like I'm gonna get some correction on it. So, and you see the 15 is at the top, but if it doesn't, if it comes through and it keeps pushing through, then you know you're actually headed to that last take profit. Okay, we got another testimony, day 2, and you're putting in your demo account. I love it. This is what this is about, empowering you. This is why we trade the way we trade. You are 1 million families financially educated and impacted. And that's why we trade the way we trade. We trade with you and not for you, so we can get testimonies like this. Today is day 2 for me profiting in my demo account. So day 2 and you're in profit. So, and day 2 and you're in profit. I love it. So indices is gonna be a whole nother story. And honestly, indices is the same thing. Indices like this. The same thing I'm talking about right now is how you trade indices, right? The 9 o'clock call is really where we take the indices. So when we talk about indices, okay, when we're trading indices, the difference with indices is they are heavily impacted by the fundamentals. They have a lot of fundamental analysis that goes in it because of news or different events that transpire. So there is absolutely nothing different in trading indices except for the fact that they are going to be heavily impacted by anything that happens in the market more than the traditional Forex pairs. But Forex gets affected too, but you got to remember what an index is. So that's why it shifts, fluctuates, moves, right? They got bank reports that's coming out right now this week. So based on the bank reports, they're going to either be buying or selling. They're favorable, they're buying. They're not, they're selling. I mean, all of that plays into the indices. My recommendation with indices, they need to be in a separate account. You need to have them in a separate account and treat it like your bonus money. So yes, they can be very profitable, but you do not want to mix it with your Forex money. Okay, do not mix it. Do not mix it. Now that's like an advanced trader thing. So you're talking about if it's above the 80, like how this one is way up here, and you're welcome. So like this one is way up here, then that's like an advanced trader type thing. So, but you want that pullback because you can see that's a continuation. But that's why I said, so don't just jump in it when it's up there, right? You're not just going to jump in it. So when you're sitting there and you're looking at it, look at what my hour is and look at what my hour is starting to do. And look on my hour, you can see that pullback that's right here. You see that pullback right here? So you can see that. And so, you know, you can see where it's actually at all the way up here on, you know, on a higher time frame, but you can kind of see some of that pullback on the lower time frame. So you want to make sure it breaks this support resistance line. Make sure that correction is out of it before you try to jump in and take the trade, because what typically happens, you're going to get some correction, right? You're going to get some correction at support and resistance lines. So, but ultimately, if I'm looking at my 4 hour, look what my 4 hour is doing. My 4 hour is headed in a buy. So we already know this is that designated take profit 3, but that 4 hour is actually headed in a buy. So in the midst of all of it, just like this was a sell. Look at my 4 hour stochastic, that was a sell. So that's going to help you understand that as well. That'll help you navigate. So ultimately it's buying, but you're going to have to ride out. Look at what my hour is and everything else is at the top. So take profit 3 normally has to go through some correction before it goes to take profit 3. So coming over here, let's see. You got another one that's moving. Let me go ahead and move this one. So actually I don't have them all of them. That's like take profit 1. It's actually a take profit 1. And then there's a take profit 2 in here. So, but this is the exact same thing, okay? Look at y'all getting some trades out of the training tonight. Let me drop this one. I don't have this one in there. So now, what do you have? What do we have here? Is this one is actually moving before the call. You talking about some 777. So before the call, this one was actually below it. So I don't know if anybody would have saw this one, but yeah. So it was actually down here. You can we're on that. This one is at 9:30. So so that's at 9:30. So you can kind of see where we're headed to those take profits. Now, if I'm looking on my hour, let's talk about how this trend line, right? Let me shut this down. Okay, I'll come back to that in just a minute. So you can see how this trend line, right? You see right here where we had the blue line cross over the red and the upper momentum. You see that trend line there, right? So this is a harmonic scan. This is a harmonic scanner saying, hey, this is a harmonic pattern in the market, okay? And then it's gonna go for a buy. Remember, you don't take them blindly. I'm gonna tell you that every time. You do not take them blindly. You gotta bring it back over here. And because we were talking about trend lines, what I did is I just drew this trend line on here for you, right? Drew this trend line on here for you. Now look what happens. When I'm looking at this, I'm looking for, I got my blue line cross over the red and the upward momentum, and I am looking for that green candle with a flat bottom, you saw it flip to the bottom. So that's what I have right here. Now let me check my confluence, right? Let me check my confluence for you. When I check my confluence, I actually have confluence right here. What happens once again at that confluence? What happens? It begins to break the trend line. Do you see this? Okay, at 9 o'clock, this was a new 4-hour candle. So we got a new solid 4-hour candle as well. So this literally, right? This literally is coming out. This is doing. And so now it's pushing through with a new 4-hour candle. So you see the momentum is in that buy. So let's check our 15-minute for where we were for that entry. And you notice that time frame confluence is every time I switch time frames, I'm calling it time frame confluence. Every time I go to the 5 and the hour, I'm calling it time frame confluence. So every single time I switch, I'm calling it time frame confluence. So if you think about it and you look at it, that is going to help. Like the higher time frame is where the market's going, and then that lower time frame is my entry. So because that pip reaction time, right? That pip reaction time that you have or understanding, because, or we might just want more than 10 pips and cash out. I don't know who's in this trade, but y'all should be y'all should be making some money. So if you look, and you can kind of see, if I drop down to the 15-minute, you definitely see that it's buying. Even here, when we were talking about value in this one too, even here, if we're talking about, you know, if we're looking at, you know, where this one actually kind of broke through, or where this one actually pushed through, right? This one, so where are we even getting much correction, right? Are we even getting much correction? You surfing too. I love it. Now, ain't this a bonus that on a training night, y'all taking some trades, right? That's a bonus. So, so you can see where this one didn't have much correction, right? It just did not have much correction. And so that's what, you know, so we're looking at that. So you did not have much correction. So that kind of answers that other question that we had too. And so then to answer the other question about the take profit 1, 2, and 3, understand that these take profits are nothing more than support and resistance lines, all right? They are nothing more than support and resistance lines. I cannot stress that enough, okay? It's just you happen to get to this one, and then you get to this one, and then you get to this one. So how you take them, it's not 3 different trades. You know, it's just, this is take profit 1, this is take profit 2, this is take profit 3. So you have to make the decision and determination how you're going to trade it, and how, you know, and what you're going to do. You have to make that decision, right? You have to make that decision. If you're going to go to take profit 1, and when I get to take, once I get here, as I move to take profit 2, I move my, you know, I move my stop-loss down here, right? You have to make that decision. You make those decisions, okay? You make those decisions on how you do that. So definitely want to make sure you understand that. So you can kind of see where that's pushing up. Now, and then also, if you just go to take profit 2, just, you know, this is where it also helps you understand. Yes, it's like trading. It's yes. Once it breaks and start everything, you go to your next support. You go to your next support level, resistance level. Absolutely. So that's what that is. Yep. And you guys can definitely see that it broke, right? You can definitely see that when it broke, and that's the point of why I started drawing these, is because when we started taking trades together, like when we started trading together on a higher time frame and not just a 15-minute chart, like when we started doing that together, then what happened is, you know, that drop down. So with time frame confluence, that drop down is important, okay? And I noticed that a lot of you all were not doing that drop down when you're trading on the 15. And what happens is how you do one thing is how you do everything. So when you go to a higher time frame, you don't do that drop down for that entry. And then you end up in a trade that's pulling, because that's part of the confluence. So I gotta have that one too, right? I gotta have that one too. You have to have that one as well. Now, stop loss. I was asked about stop loss. Now, when I'm talking stop loss, okay? Talking stop loss, your SAR, your PSAR is a trailing stop loss, okay? It's a trailing stop loss. So your stop loss should always be below the PSAR. When you enter the trade, it should always be below the PSAR, or it will be above the PSAR. It's gonna be below the PSAR, or it's gonna be above the PSAR, right? Now, based on how I'm trading and what I'm doing, right? Based on that, what I'm looking for, right? What I'm looking for, I personally, even if I'm on a 15, like if I know my trade started on a 15 and I ended up being able to roll it into there, like if I know if I'm going for more than 10 pips, I jump up a time frame. Your risk management is completely up to you, okay? I'm just telling you, it cannot be in between here. This is like a serious no-go, right? This is a serious no-go. It does not go in there. It goes outside of there, okay? It does not go in between here. Let me show you why, okay? Look at where my PSAR is. Look at where they are. My PSAR on the sell is on top. There's space in between my candles and the PSAR. That's my momentum. That's right. That's the momentum. That it's a trailing stop loss. So the market has reversed. It's called a parabolic stop. See, stop and reversal. It's in the name. A parabolic stop and reversal. That's what it stands for. So it's a stop and reversal, meaning that when it flips, the market has reversed. So I don't want anything in between that momentum. I don't want anything in between that push, okay? You do not want anything in between there. And even if you get pullback sometimes, like look at how this wicked out, right? In that pullback. But until the momentum shifted, my PSAR didn't flip. So you never want your stop loss in between there. I understand risk management. I understand what you're looking for, but this is like, what I'm telling you is, you will stop yourself out of more trades than you will take profit if you put your stop loss in between your PSAR and your Hikinashi candles. You want it outside, okay? You want it outside. And I cushion mine a little bit more. I'll go up because, you know, the PSAR is going to be a little bit wider on the next time frame. So it hadn't flipped on this one, but I will, it just did. It literally just flipped. I will put my stop loss outside of the higher time frame. If I'm on a 15, I'll put it outside an hour. It gives me more cushion for those pullbacks, especially if I'm doing a longer trade. So that's what it does, okay? That's what it does. And you can kind of see that, and it does the same thing with this one. You see how this one, so it really gives you, but of course, if I feel like it's, you know, of course you're using proper risk management, because this one is about, you know, that's like 30 pips right there. So it just all depends on what you're looking for in your risk management level, right? So I answered your question. Got you. Awesome. So that's what that has to do with. So just keep that. So do I have any questions, comments? You guys see, because I really wanted you to see tonight how it breaks, right? How it breaks, how it breaks, how it breaks. Questions, comments, drop it in the chat. Ha, awesome live example. So you awesome live example, you in profit, you in profit. So you place or determine your stop loss on a higher. Yes, that's what I do, because if I'm going, that's, now I'm telling you now, that's how I do it, because, but everybody has to do it to their preference. And I do it like that to give myself cushion, because you need a stop loss when you're trading, but I'm doing it to give myself that cushion when I'm going for a longer trade. If I'm just doing like 10 pips and cashing out, then I'm just going to doing it right there on that time frame. So you want to give yourself some cushion. So to be able to what? Oh, the drop down. Okay, let me answer this question and then. So wait, how long ago was this? This was 1 hour and 32 minutes ago. So let me pause this. So indices, right? Now, if I'm doing 10 pips and cash out, if I'm doing 10 pips and cash out, if I'm doing 10 pips and cash out, then 10 pips and cash out, I'm staying on that time frame. 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 So my call price right here, okay? My call price was at 12850, right? That's what my call price was at. Now, this happened at UTC time 15. So I got an indices question that I said I would answer if we had time. So, no, it said 15. Now, you can see where we got this intersection, right? Where this actually happened, right? So that's where that happened. So when you're doing indices, it's the same exact way. So this called it on the 5-minute chart, right? Called it on the 5-minute chart. Pull up my 30 for my confluence, right? My confluence is still buying, right? You see that yellow line right there? My confluence, I'm definitely buying. I'm definitely buying. Then, I'm gonna kind of look left to see what's going on as we do every morning. Then I'm gonna go back down to my 5-minute, and it's an answer that going down to the lower time frame question that's in the chat. So right here, I'm on a 5-minute, right? On a 5-minute, I need to drop down a time frame. I need to drop down a time frame to make sure it's still buying, okay? The low time frame has to still be buying, okay? And you see that it is, right? Actually just started. So at this point, even though, look where we are, right? With this one. So even though, look, I could have definitely, now this is the difference with indices. Indices are points and not pips. So if we're on a 5-minute chart, we're going for like 5 pips. You're scalping on a 5-minute chart. You're scalping. You're scalping. You're scalping. Now, I'm just answering a question about, the trend. This isn't a trend line. However, that I know we're training on trend line, but this is also going to help you with that time frame confluence question as well. So we drop down. So I know for a fact that because this is points, I'm looking for points. On points on a 5-minute, you can do like 10 points, right? You can do 10 to 20, but let's just be on the safe side, because you guys are learning, and you can increase it as you get more comfortable, but you should be doing this first in your demo. Even if it would have active, it kind of started right here because you kind of see where that pullback was. But let's just say from right here, right? And we let that play out. You got your 10 points. It went up to about 25 points, right? It went about 25. So you got your 10 points. You definitely got your 10 points. And that's what this did. So the vibrato is going to help you take these trades as well, even on indices. So as you can see, indices work the exact same way. They work the same way. They work the same way. The only difference is like when we in the morning, you had a morning bell, you understand the cycles of information being pushed out into the market. When you understand that, then you also understand that this is going to be impacted more by that, okay? This is going to have some heavy impact because it's an indice. It's an indice. So you're gonna have, you definitely have to understand it's an indice. So, all right. Hopefully that answered that question. Now, let me see. No, 10 pips is not an automatic stop loss. We just went in detail on the stop loss. Because if I do 10 pips, right? If I do 10 pips, that's going to put me in between here. You do not want your stop loss in between the candle and the PSAR. Use the PSAR. The market is telling you where your PSAR is. Use the PSAR. Use the PSAR to determine your stop loss. You put it above or below the PSAR. It has nothing to do with the amount of pips. It's all in a, and trust and believe. Let me leave you guys with a little tip on that. So you guys, if you think about it trade by trade, okay, if I'm thinking trade by trade, then what I'm thinking about is, oh my goodness, I'm going for 10 pips, but some currency pairs I have a 6 pip pullback on the stop loss, and GBP might have like a 30. But you just understand that each one is going to be different. If you think trade by trade by trade by trade by trade, then you're not going to be relaxed enough to walk into your greatness. Now, if you have a trade journal where you're logging your trades, then you would actually be able to see that even if I take a loss, because we're talking about a 92, if you're doing this with your time frame confluence, right, then you're going to have a 92% or higher accuracy rate. You're going to have that. We have, I mean, it is not just my trades, it's too many people in the chat. It's too many people trading the strategy that have that. So you're going to have that 92% or higher accuracy rate. So if you have a trade journal, and you actually log in your trades, then you will see that your overall profit far outweighs a loss that you might take. It's going to far outweigh it. And I'm gonna say this, I'm gonna say it one more time. You always use time frame confluence. I don't care what time frame you're trading. You always use time frame confluence, period. You always use time frame confluence. You always use time frame confluence. Why is that? The strategy is back tested at 92%. However, you have something called a pip reaction time. You also have to incorporate that with your broker spreads. So when you take all that into consideration, I have seen pip reaction times that's literally been 10 pips or 12 pips. I've seen ones that's 16 pips. I've seen on average, some of them are 6 to 8. So you don't know how long it takes you to get into that trade. So if I'm going with 10 pips, but I got a 10 pip reaction time, I just took my time to get into that trade where it would have covered those 10 pips. Whereas, you know, what is my execution time? How do I keep my accuracy high? How do I make sure, right? You also don't want to trade a quick correction, right? You don't want to be trading, to jump in a trade and it's a quick correction. You don't want to do that. So you need to use that time frame confluence. That's going to help you. That's going to help you make sure you get your 10 pips and cash out. So no, the PSAR does not have to flip on the higher frames. It needs to look, time frame needs to look like a setup. So it needs to look like a setup. So there is a playlist called Trading the BYOB Cash Out. The first 2 videos, for everybody that's asking about time frame confluence, the first 2 videos, you guys should go watch that. It's the BYOB Cash Out, and the next one is time frame confluence. Those very first 2 videos are going to help you, and that will answer all your questions about trading the BYOB Cash Out and time frame confluence. So that will answer your questions. And then there's a nice little list that's there for you too. So that's going to help you. But as far as the trend lines go, right, you can actually see when do they break. Like this one, we definitely are not there. That's why we didn't look at this one. This one, we're not there. That's why we really didn't go down. But on these two, you can see where it broke. And so now when we're taking a trade in the morning and you got your actual setup, right? So when you're taking that trade in the morning and you have your set up, you can see how this can help you. A simple trend line can help you see when to actually get into the trade. It's going to help you. Now, but remember, do not take a trade unless it's in alignment with the BYOB cash out. It has to be in alignment. It has to be, right? You have to be taking a trade as far as the BYOB cash out is concerned. So for the 5, no, yes, that's correct. That is correct. That's correct. Just remember, it's a factor of 4, 5, or 6. You're gonna drop down, but remember, it's a factor of 4, 5, or 6. Whatever time frame you're trading on, just multiply it by 4, multiply it by 5, or multiply it by 6. And that's gonna be the time frame that it falls on. Just remember, a factor of 4, 5, or 6. Okay. Whatever time frame it falls on, you multiply it by that, and that's gonna tell you the time frame that you could be doing confluence on. Because if I'm trying to take a trade on a 5-minute, I do not need to be on the daily, right? Don't need to be on the daily. So that'll help you put that in mind. But hopefully what the intent of tonight's call was to make sure that you guys were able to walk through and able to see the BYOB cash out. So hopefully you guys were able to see how the trend line, when we're utilizing the tools, can really help you. It can help you increase your accuracy rate, you know, just by that. And actually, how does it do that? Because it actually helps that you see things through a clear lens. It's going to help you see it with a very, very clear lens. So just really want to help you understand that. But thank you so much. But do not go anywhere right now, because it is